Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we're navigating digital finance all together. I'm joined with an excellent cast of characters tonight. Hello, I'm your host, Zenith, and as always, I'm joined by Dace. How you doing, buddy?
What's happening, brother? I'm well. It's been a busy and productive day, and happy to keep it going here with you, man.
Glad to hear it. And as always, joined by Tracker as well. How you doing, my man?
Doing well, doing good. Also upset about missing last week's, but had to take care of some things. So glad you guys had down a really nice show last Monday. So I'm glad to get back into it. So as always look forward to the Monday shows.
Yeah, you were missed, but at the same time, though, we did have a fun show. We did a bit of a deep dive into World Liberty Finance. And, well, it's been interesting to see how that launch has been going since then. Justin's son had a very fun time getting a lot of his tokens frozen on some exchanges there with associated projects. And, as always, the Nigerian princes and the scammers, they came out of the woodworks posting fake URLs to try to trick people into connecting their wallets to it. So, again, remember, stay vigilant, folks. Check those URLs. If you know that you can trust the site, bookmark it so you don't stumble the next time you get there. But outside
That's
of that,
crazy. Which one of y'all showed the chart? Which one of y'all had the chart of how many addresses have been blocked on UST and also on Ethereum? That was an interesting chart. Like so many addresses have been blacklisted. And my question on that was, what's the criteria for being blacklisted?
I don't know that we showed that chart. I would love to see it. It may have been some other content you watched, but if you could pull it, dude, I would love to see it this evening, because
for it.
We did touch on that both last week and last night on D's and Roundtable, right? Because last Monday was the World Liberty Finance report card review. And then fast forward to last night, we got to, less than a week out, we got to sort of assess that report card after some really serious macro things happened. But the TLDR is admin keys, right? If the chain and the tokens that you're holding have admin keys, then whoever holds those keys can effectively do whatever they want with your cash.
not your keys, not your crypto. Second there for you give those up, you give up everything associated with them.
For sure.
Yeah, I just sent it in our Walk the Block leadership chat, Zenith, if you wanted to pull up later. I don't want to derail the show because you got a lot of great stuff in here, but I just thought it was interesting. It actually shows you the numbers. And I think this was through Somni or something like that. It was interesting because it was showing like how he's pushing the whole PDI, which, man, I love the guy. His due diligence is in just perseverance is off the charts, but he's showing how PDI is 0. But USDC, I think there's been 295 addresses, and then on Tether, 2,200 addresses have been blocked on those various chains that have been quote unquote blacklisted. I was just curious to know what qualifies, like what is the criteria so we all know what not to do, but it seems to be a moving target all the time.
Yeah, well, the short answer is don't go touch any of the stuff that the U.S. government has deemed to be on their blacklist. And if you do, then any crypto token associated with that now wallet that has touched the naughty stuff, that will also be on the list to receive coal from Santa.
Yeah. I see an opportunity for other countries to welcome those blacklisted things, but that's here nor there.
Yeah, it's true. It's true. So, main topic for tonight. Thing we wanted to talk about is we're calling this the changing of seasons, aka we want to do a little bit more of an informational deep dive into the crypto seasons, what they look like, how they move, and the natural order that they take. So we will do a quick look at the markets beforehand just to give you an idea of what's going on because, well, we're getting ready for the big week coming up, and that's going to be not this week, but pretty much the week after that. And that's going to be when we actually have the Federal Reserve deciding whether or not to do rate cuts. And yes, today I'm starting to see it. The headlines, people are going crazy saying, oh my gosh, they're going to cut even more. It's going to go crazy. The market's not ready for this. And I'm like, we've been ready for a month now. I don't know why you're saying this now.
Yeah,
right, with that being said,
it's been a long patience here, man. This is the law, just rocking everybody to sleep during this market right here. We had a nice run up. This is what it does. Plays with everyone's psyche.
Okay, it's felt like it's been the longest just like month that we've been waiting ever since we got past the last meeting, and then we got the jobs reports, and then we got additional jobs data, and then we have inflation data. Now we're just sitting here waiting for the next one. It's like, all right, well, got to figure out something to do in the meantime.
Oh, there's always stuff to learn. All the deals going on, and there's so many partnerships going on right now.
Oh, absolutely.
Whether it's legally partnerships or just partnerships, on working together, but there's so many things moving.
Most definitely. Before we get to it, though, I do want to give a special shout out to Mr. Moonpill Rational Optics. He's out there hanging out. He's got a question for us. He says, Zenith, what if someone, not saying who, if they sent a full Bitcoin to someone who they said would stake it in their Swiss bank for you, what would you do to get a hold of them again? I sent a full Bitcoin to someone, so they would stake it in the Swiss bank for you. Well, this might deal with some contract law, but unfortunately, I'm not an expert in Swiss legalities and how you penetrate those legal barriers. But it sounds like you may or may not have entered some sort of financial contract with this person. Therefore, as long as there's an offer and there's consideration and there is acceptance between two parties, as far as the United States is concerned, that is a legally binding contract. Therefore, can be fully enforceable by the contract, the terms of the contract that you set out, and the laws surrounding it. So, do the best to get a hold of them. If you believe you have a case, well, maybe talk to a lawyer and see if they can help you out. But not much. Yeah, unfortunately, so not good. Yeah, unfortunately, unless you have something really written down, this sounds kind of just like the handshake deal with the Italians that we try not to talk about at that restaurant that we made 2 years ago. But, we needed dry powder at the time.
Well said, sir. I have nothing to add. Nailed it.
I'm just saying, they're very nice. They were more than happy to. And then I kept coming back, and they looked at me like I was more and more of a crazy person. Yeah. All right.
What season did that take place in, Zenith?
That was definitely a winter/spring for crypto terms. Which is when we were like, oh, this is the bottom. No, there's another bottom. Wait, one more bottom, I swear.
The dip of the dip of the dip.
Yeah, the dippity dip.
Be careful on that leverage, man.
It's true. That's very true. And by the way, I am just joking. Nothing we say here is financial advice, but it's generally good practice. Like, don't go into debt to buy investment assets. What are you doing? That is so risky and so stupid, especially in crypto where nothing is guaranteed and volatility is a feature, not a bug. So, like, it's bold. That's bold. But I guess fortune favors the bold. Sometimes those people are also stupid, but hard to differentiate. Anyways, all right.
Those Venn diagrams overlap quite a bit.
Yes, Venn diagram looks awfully like a circle.
I think Michael Saylor's in the middle of both of them.
He is. But right now, he's doing pretty good. All right, gentlemen. So we have a bit of an indicator going on. Gold is reaching a new all-time high of $3,630 per ounce. Can't remember the last time I touched a gold coin that wasn't a Sacagawea, but as far as the chart goes, I'd call that some steady growth right there at the end. We flattened out there pretty good ever since, April of 2025, sitting right around that 3,400 level. But now we're taking off again. Gentlemen, can anyone enlighten me as to why gold is suddenly on the move?
Well, I wouldn't say suddenly. If you zoom out to a monthly chart, if you really want to see what parabolic looks like, go back to like a 12-month chart. Hey, do a 12-month chart. You'll see it's been a pretty good investment.
By the way, this is already on logarithmic. Oh my gosh.
So yeah, there's gold has its periods where it kind of has a lull and stuff like that. But right now, gold is going up against fiat, of course, but is it going up against other assets? I don't know how many other ratio charts, obviously it's gone up against crude dramatically. It's gone up against other, assets as well. Silver has also been making a huge move recently too. The silver market has been doing a really good move as well. Yeah. Ooh. Silver's been going even more aggressively. The gold miners are even ripping even more. So gold miners are basically, they're more of a leverage play on the gold move. Is typically how that works. It's a little bit more to it than just that, but that's typically what happens. So if you want leverage on gold, buy the miners. And right now they're going to be in a very good place. Certainly if rates start getting cut, gold miners will absolutely rip. Rip hard. They'll really move quickly. maybe not in the same extent of crypto, but they will move for TradFi very much. The moves, it's some pulling me. The hints of rate cuts. There's also the silver, though, one's interesting because it's more in the industrial aspect. So there's a demand for silver. It's used in a lot of productions. So even though everybody keeps saying the economy is going down, but then why is silver going up? Why are other precious metals going up, like palladium and other things like nature? So I think it's just is it simply just a chase for hard assets against fiat? Is it just that simple, or are there more underlying tones? And I think with silver moving, I think there's more to it than just, a hedge against inflation.
True. I'm getting breaking news through my headset, aka Telegram. What do we have here? All right, from Dace, long-term trends, baby. This is the Bitcoin to gold ratio. Apologies, it's a little hard to see. I wonder if we can improve this. View in full screen. Yes, I would love that. All right, what are we looking at here? I see it's hard to read, but these little boxes, those are what appear to be market tops of Bitcoin. So Bitcoin versus gold. Well, looks like it only goes one direction, basically.
For sure. And if you look at since the most recent top, we've had a much flatter move, right? So in the most recent action, they've been pretty steady with each other, right? That mostly flat line, if you take it from the last, I can't zoom in to see the second to last tick on the bottom, all the way to the right. Yeah, the right two most sections are just about left to right, and so, yeah, I think it's interesting I know a lot of people make the equivalences between Bitcoin and gold, calling Bitcoin digital gold. And you're right, Tracker. I think all of the fiat being printed, inflation fears, combined with the international inflation situation, the international fiat situation, I think you've got a lot of pressure on gold from more conventional and old school players who know nothing about crypto, but they know what they see in the political landscape, and so they rotate. I think it probably is a contributing factor.
That's true.
I heard this interesting thing about gold, though. A lot of your gold bugs or traditional old school, you brought that up. That was a good point, Dave, that the traditional old school folks who chased the safety would use gold. A lot of those people are retiring now. So they're starting to cash out of their gold. Matter of fact, a lot of the people on the gold industry are starting to see a huge selling of gold going on right now. Not to say that that's going to affect the long-term chart of gold, but you're seeing a sell-off, which is interesting. I think it's going to be probably a regret. I get it. People are retiring. You can't take it with you when you die, but I think there's going to be some regret. People selling their gold right now to rotate into some other assets. Now, the only caveat is once they start cutting rates, you will see absolutely gold maybe having some sell-off and selling pressure because people are going to, simple. You sell your winners to buy your laggers that have more potential to run. It's that simple. And that's what a lot of your hedge fund companies will start to do if the rates start getting cut. But long-term, I still love the play where if you're in riskier assets like crypto, be in that. But when obviously it's all about timing, but when risk is now time to come off, a good place to hide is gold and things like that. But keep in mind, gold's not always 100% safe. There have been times in the past where it has fallen off. So you have to keep that in mind as well. But right now in this environment, gold's doing well because of, like Dave said, obviously the geopolitical and policy uncertainties. Those are the big ones. Interest rates keep getting cut. Well, what does that do? That devalues. So everything that the central banks are doing are really destroying the underlying dollars. So it's why everything just keeps, making gold, people seeking shelter. And not just here, but internationally. We talk about the United States, we have high inflation. You don't know what high inflation is. Go to Africa countries.
Venezuela we covered last night, Z? On the DJ Roundtable last night, we covered Venezuela's at 229% over the past year.
Yeah, dude,
year-over-year inflation, 200%.
I mean, look what happened. To put in perspective what they're going through, though, but look at what happened to Russia when the Russian Empire, USSR crumbled. People were going with the infamous photos of people having wheelbarrows of cash just to get a loaf of bread. I mean, those are scary times. This is what people are freaking out about around the world because they don't control the money printer on the Fed, US Fed, yet it's the world currency. You got to go somewhere that it's going to hold up. And everybody knows gold holds up. Why? Because it's been proven for, I don't know how many hundreds of years it's held up.
Well, I think you made a big... Go ahead.
No, that's it. I'm good.
Man, just to tag on something you said, we're in the longest secular bull market for the stock market in the modern era. It's been on a disgusting run, and it's been weighted to the top. If you map all the indexes against each other, I just looked at this chart the other day. It puts, the NASDAQ, the S&P, the Russell, all of them on one chart. And there's a crazy gap between your very top performers and everybody else. And I think big players who are, like I said, maybe old money, or conventional, traditional investors, they're saying this is the longest stock market bull run we've ever had. We're going to take some profit off the table and put it, like you said, and hold it in, hold our dry powder, hold our bear market reserves in the thing that's kind of the most evergreen over time, which would be those hard metals.
It's true.
Which is, I know we're talking in the. Sorry, go ahead, Zena.
I was going to say that's true. As far as the stock market goes, you're not wrong, which is that you see the dot-com bubble crash happened in 2001, pretty much went off for about 3 years there. Almost, yeah, about 3 years. And then we go up, 2008 happens, major bottom, even more than the dot-com bubble crash. Then we've just been on an absolute tear up and to the right. Granted, there have been these brief moments of kind of like some things going on, namely like big dip there. Yep, that's the COVID dip. And then this little V shape here, that's actually pretty much the Biden presidency for most of it. And then this yellow arrow over here, that's when the Trump election happened in November. But you can see, I was tracking this for a while. This is actually one of the things that really solidified, okay, guy, you got to go get into crypto because the stock market stuff's not working out. Because I was trying to learn how to trade stocks and options like right around here. And I was like, okay, we're doing good. And then it just fell out of the bottom.
Yeah, look, I mean, even the COVID dip, right? They printed their way out of it. So ever since 08, right? 08 was the great financial crisis, global financial crisis. And I think, the U.S. economy kind of has been in an iron lung ever since. And it's why, cosmetically speaking, it's been up only since, right? Because if you take things off of manual and you put them on autopilot and you print the money to make things look properly, then what do you know? The S&P will just go up slowly over time, and that's what we've got since then. Interesting.
Something else to consider, though. Everything you look around has gone up in value, correct? Because of inflation. Stocks are no different. They are also inflated because of inflation as well. So
For sure.
there is the last 5 years, you can go ahead and take the annual return due to inflation is 4.6% off the table. Going back to 2025, 2.7%. So every year over year, you have to trim this much off just if you want to adjust for the inflation on the actual value. So yeah, you're getting sticker shock, just like on everything else we're seeing around the world, including the stocks, which is funny because historically, people will tell you just own stocks and you're gonna get 7%, 8% annual return, right? Well, that's not because they're getting more valuable. I mean, yes, there are some outliers, but overall, it's just because you're trying to keep up with inflation.
Correct. You're just preserving your buying power in an asset vehicle rather than leaving it in fiat where it's melting. Yeah.
Right. So gold, for example, I saw that crazy stat when we did the history of money, Zenith, and they said it was something weird, like 1 ounce of gold is still what like an officer or a general or somebody in the military gets paid today is equivalent to what they got paid 2,000 years ago in the Roman Empire. It was an ounce of gold. So pay is exactly the same.
Yeah. Well, I've seen the graphic where it's got a house from like 94, 04, 14, 24. And it's under the house. It's the same house. And then under it's the price. And it's the price in gold. And it's the same over 4 decades. And it's the price in dollars. And it's gone up astronomically. And it's the price of Bitcoin. And it's gone from hundreds of Bitcoin to a fraction of one.
Well, the interesting thing about that one actually is that according to the data, we know that real estate has never been more expensive when it comes to US dollars. But if you actually look at real estate versus the gold price, it has almost never been cheaper to buy a house in terms of gold. This is where we're at right here. The only time it was cheaper was pretty much 2011 and 1980. Other than that,
what that tells me is gold has these big blow off moments, but it doesn't look steady. But in terms of the perceptions of folks, right, it's got these big run ups and then these corrections for sure on this graph anyway.
And keep this in mind, the early 80s interest rates were insane. 16 to 20% for a 30-year mortgage at that time. That's when mortgage rates were at the almost the all-time high, was in the low 80s, in the mid early 80s. So I don't know if that has any correlation with this. Probably it just feels like it does.
I don't know. The other interesting notes is like you can definitely see when certain things are good prices versus bad. It's also the difference in the asset classes that we talk about, because we were looking at the Bitcoin Bitcoin gold chart earlier, and it's like both those things are technically hedges against inflation, but Bitcoin definitely outperforms gold, but then also definitely crashes a lot harder at certain points. So it tells you which one's more speculative. I think that real estate is also a good example when you compare that to stuff like gold, which is that gold has these times where it just kind of goes on an absolute tear and versus other assets. And then we see here right around 2001 when we had the dot-com bubble, and then also when we have the 2008 financial collapse. Those are times when other macro factors were making real estate harder to hold on to. And that was one of the few times we actually seen the real estate market have a slight correction. But at the same time, it doesn't speak for what gold was doing. Gold was still very much being an inflation hedge. And around that time, there's specifically 2008 financial crisis. There was also a lot of talk for talking about national debt and what we're doing with the US dollar. That was one of the few times when it actually was a bit of a mainstream topic. Again, it has definitely recently become one as well. And then we did kind of see the Tea Party movement around 2012, where trying to balance the budget and get the national debt under control was another issue. But that's also fallout from 2008. So going back to the old history of money, Crypto 101 show that we did, yeah, you got to understand that the different asset classes have pros and cons to them, and they behave in different ways because they have different factors to them. Real estate is definitely going to be a lot more influenced by what's going on in the overall economy, whereas gold is going to be more influenced by what's going on with inflation. And then crypto is going to be very exactly. And then crypto is definitely going to be more of looking at those seasonal changes and the risk on, risk off investing behavior that people have at a larger scale to really chase gains as opposed to just hold on to what they got.
Yep. And just to add to that, the financial crisis was a liquidity problem. They had a huge liquidity crisis on their hand. That's what a true shock moment looks like when there's not enough. Basically, think of an engine. There's not enough oil flowing through the engine. It starts seizing up. That's what the problem was, and it happened because of manipulation of basically putting a lot of assets into people's hands that couldn't afford them, and that's what caused the housing bubble, which is the reason why Bitcoin was invented.
Hey, there you go.
Because of the crazy, recklessness of monetary policies.
True. Oh, I wish I saved it. I found a good tweet earlier today that was on the old crypto Twitters, and it said what it feels like's going on, and it had a line that had US dollar flat, Bitcoin like chopping up and to the right, and it said what's actually going on, Bitcoin flat line, US dollar chopping down to the right. It was like
well, the scary thing is when you look at it and you look at what you could buy, like what a dollar could get you, and then that chart anybody could understand what the dollar was actually worth back before the Federal Reserve, before they started manipulating everything. And now what it's equivalent to is just pennies compared to what it used to be worth.
Well, yeah, it is a totally different tool, right? It is being iterated by those who create it in a totally different manner, and we're calling it the same thing. Zenith, if the if the reality of the chart looks like that with the dollars dropping against Bitcoin, which you don't want to go look at, is the Doge to Bitcoin ratio chart, with Doge being the only thing to ever outperform Bitcoin, which tells you that Doge is just infinitely more value than the freaking dollar. It's nuts.
There's a really great irony to you bringing that up, because I was going through articles today, and some of the headlines are talking about how there's a potential Doge ETF that could be approved in the next week. And additionally, there's other companies that are investing in Doge as part of their actual crypto strategic holdings as well. So it's like,
yeah, man, the price dictates our behavior these days, right? It's not about what the gold's backed by or the dollars are backed by. It's what's the chart doing?
Yeah, it's wild to think about, but that is the world that we live in. All right, gentlemen, tell you what, let's get on to the crypto talk. We've had a little bit of it. We've dabbled here and there, but let's talk about why we're here. So we're going to talk about crypto seasons tonight. This is a concept that usually just gets floated around, and unless you really know what's going on here and which kind of version of seasons people are talking about, it's very easy to kind of get lost in the weeds. So we're hoping to really just lay it all out there and let you know what's going on. We've got 2 articles tonight that we're going to be talking about the different ways you can think about seasons. This first one, which comes from E-Trade back in 2023, by the way. So shout out to these guys for trying to get on top of it. This is the 4 seasons idea. This is winter, spring, summer, fall, and how crypto goes through each of these different seasons and the growth or degrowth associated with them and what's going on with it. The other alternative is something that we've definitely talked about on the show, which is altcoin season, whether it's Bitcoin season or altcoin season, and the fluctuation of the markets between where we're really going full degen or we're really just trying to get more Bitcoin. So with that in mind, let's talk about the 4 seasons. So they are 4 seasons of crypto. We have spring, summer, fall, and winter. Spring is the period from the low to the next halving. Well, what's a halving? Halving is something that's baked into the code of Bitcoin, which is that every 4 years, they reduce the amount of token emissions that go out to the people validating blocks on the Bitcoin network. The most recent one that we had was back in April 19th of 2024. And the one before that, 2020, 2016, 2012, so on and so forth. I believe right now we're at about 3.125 Bitcoin per block that is released. So when we get to 2028, that's going to go down to about, what is that? 1.675, I believe is how the math works out on that one. But what people have noticed, what this does is it actually has a bit of an effect on the supply of Bitcoin that is released to the markets, which creates a bit of a change in the price, the old supply and demand curves, which causes the action to happen, which helps create some of the cycles going on. If you follow 4-year cycles, this is exactly what it is based on. So spring, they define it as pretty much end of the bear market towards the start of the beginning up towards the halving. Summer, historically, most of Bitcoin's gains come directly after the halving. This bull run period starts with a halving event and ends once the price of Bitcoin hits its prior peak. Fall is once price surpasses the old high, it tends to attract interest from the media, new investors, and businesses, which can then drive prices even higher. The fall period represents the time between when the old high is passed and a new high is reached, which signals that the bull market has run to its course. And then, of course, we have winter, the dreaded winter. The inevitable bear market of decline comes when investors decide to lock in their gains, causing prices to drop while scaring off new investment. The winter period takes place between the new peak is reached and the price of the Bitcoin hits its next cycle low. There have been 3 winters since 2011, and they last about 13 months each. So, looking at the numbers, spring, this is market low to Bitcoin halving. It's about 14 months on average. And the average monthly returns are about 7.5%, depending on which cycle you're in. Summer, this is going to be between halving and new all-time and hitting the old all-time high. Duration, about 5 months, notably shorter. But during this time, the cycles have about a 17.3% average monthly return. Finally, we have fall, where we go from old all-time high to finishing out where we stop at our new all-time high, and that's about 10 months. That is going to be our 2012 cycle, 2016, and 2020, averaging about 38.6%. You might notice there's a bit of a trend that goes on with the numbers here, which is that the first cycle, the 2012 one, had very aggressive growth. 2016 cycle had slightly muted growth, and the 2020 was a little flatter as well on top of that. So this is one of the reasons we talk about logarithmic decay when it comes to gains and losses for Bitcoin as it becomes a more mature asset into the future. More on that one later when I can pull up the chart and actually draw shapes for you. Finally, though, winter. Average duration of 13 months. 2012, the all cycles had about losing 8%, 8.5% per month during the entirety of it. So, with that being said, the question is, how's this cycle adhering to this? Well, let's go ahead and pull up the charts for it. So, our fall ended here on the 8th of November, 2021, and it looks like the winter lasted all the way until the 21st of November, 2022. If you remember, this final red candle here, right here, this is the final nail in the coffin for the FTX collapse, and that marked the bottom of the bear market. Since then, springtime would be until we get to the next halving. However, there was a bit of an anomaly with this cycle, actually, because the halving was right there, that gray line. But you might notice that we actually hit all-time highs before the halving. That's something that's not previously happened before in this cycle, but it did this time, meaning that technically we already hit summer before we technically finished the old definition of spring.
Zenith, we missed a really serious opportunity here to create an AI Photoshop of Gary Gensler as Punxsutawney Phil. Just gonna say it.
That would be a good
No,
one.
but Dave, you got a great idea there. Honestly, it'd be nice to have like a history of the entire chart with all the different meme and events going on the whole
For sure.
chart.
Yeah,
That'd be hysterical.
If you could sort of iconize each era in a
Major
little
moment.
symbol. Yeah, it'd be fun.
Well, I first have to go back to this. I love the seasonality. It makes sense that's normal how we are, and we are getting the same patterns. Unfortunately, this go around, you got TradFi coming in. I know we've talked about this many times. TradFi is coming in. They've muddied the waters. They started it by creating a spot ETF on Bitcoin, and then they created a spot ETF on Ethereum. Dace has shared this chart numerous times where we keep thinking the shorts can't get any more, and they just keep piling on more and more shorts. That's called manipulation. So you don't have an organic flow now like you used to in the past. And if we're just talking about Bitcoin specifically, once again, you're still not going to have a natural flow. And this is why you're getting this extended cycle, because TradFi has a ton of capital that the rest cannot compete with. Yes, there's some big holders in Bitcoin, but the bigger players, trust me, they control the policies, the macro events, the Fed making its rate cuts, the fact you have the derivatives market that now can be leveraged against the ETFs themselves. So there's a lot of things that are manipulating this flow. But I guess, Zenith, where are you stating like where we're at now in this cycle? So my question would be, obviously we're not in winter. The last time when we were in winter, were we at, that was what, 13 months?
Yes, because we went from November 21 to November of 22. So 12 months,
Yep.
pretty much right on the dot, actually.
Cool. So we've had obviously spring, we've had obviously summer. The question is, are we going into winter or are we still going into a fall?
Here's the thing. If you go by the old definitions, we skipped summer. We went straight to fall. Summer is supposed to be the time between the halvening and reaching the old all-time high. We skipped that altogether when we broke the all-time high before the halving. That was the major deviation of this cycle that has not happened before.
You took the words out of my mouth, Zenith. You really
Exactly.
did. And so what I was going to say is, I think one of two things happens. I think we see the cycle break in that we don't have one, and winter is what's next. Or I think we see the cycle break in that all previous theses up until this point in the cycle for our current one are invalidated, and we have a summer after the Genius Stablecoin Act passes and the ETF staking passes. You have all of these legislative pieces that are rolling down the hill come to fruition. We have interest rates get cut. I think one of those two things has to happen because we've already been invalidated, and so it's okay. What happens next? Is it a delayed summer, or this is as good as it's going to get with TradFi in?
One of the arguments I could see you making is that instead of just skipping summer, we just restart summer at the halving, because we did have a very interesting time here throughout 2024, which I think we should not forget, which is that this was about 9 months where we just chopped sideways. After making new all-time high, after hitting the halving, after getting the Ethereum ETF launch, it didn't go higher, it just went sideways, and it went down slightly, actually. So
yeah, but what was happening during that time? What you just said, the ETF launch, that was a new feature added onto this market and onto this chart, whereby people can, on a institutional level, operate leverage to accumulate spot positions. Right. This is my speculation anyway. That's why this cycle looks different, is because institutional ETF buy pressure. As the institutions assessed how to best approach it, they realized the degree to which they could lever the price in the short term to accumulate large spot positions. That's what I think.
Agreed. So you're kind of trying to force yourself into a new theory based on everything that's happened. So I can understand the idea of maybe just trying to go from the halving to the next time we cross over all-time highs. That's going to be in October. So theoretically, you could call this time our summer, and then from here on, the fall. Or additionally, if you want to go off the idea that because we have the additional injection of capital into the markets, then we have to go off something else entirely. There is an argument you can make which uses the 50-day moving average on the weekly chart. Or the 50-week moving average, excuse me. So that's going to be this royal blue line here. If we go back to our previous runs, once you go over that 50-week mark, you pretty much stay above it through the entirety of the bull run, except for very weird situations. So notably back in 2020, that's going to be the COVID dip. That's also going to be our double top. And then after that, we get down below it and then we break down. Cycle before that, even better example. Once you get above that blue line, you stay well above it. And then once you get below it, that's the end, baby. So what we've seen in this cycle is that during that summer of stagnation, we touched it twice. And then again, back during April when we had all the tariff stuff going on, we touched it and we went a little below it as well. So that could be an indicator of the overall way that the market is moving. So I could see an argument that we've really kind of entered the fall area after this last touch here back in April of 2025. Were we at all-time highs? Yes, we were. Are we now at even higher all-time highs? Multiple of them? Also, yes. So again, this cycle is a deviation from the previous ones in the traditional ways of this four-season kind of style of thinking. But I think that all the points you guys have brought up, which is the amount of capital that traditional finance has injected, and then additionally, some of the more subjective stuff, which is talking about the fall season previously, is when you see a lot of news media attention. You see retail getting in, and you also see normies trying to get in on it. That's usually an indicator of fall. We were having all of those indicators back in March of 2024. That is a long time before any of that stuff is supposed to start happening.
You know, as we're talking about this, a thought comes to me of, I would imagine when gold was first tradable, that it had quite a volatile move. I don't even know if it was to the up or the down, but let's imagine what it was doing 5, 10, 20 years later versus technology stocks or at the time. My mind also fast forwards to like the .com bubble, like what was gold doing, when Yahoo had its legendary run, or when, Amazon had its run, or, Tesla, Microsoft, all these companies, which Microsoft I know is sideways forever. But I say that to say gold was probably not as explosive as the technology that was in vogue at the time. That's the premise. Now apply that to crypto. Bitcoin is called digital gold, right? And so I think that people like Tom Lee and your, up and coming Ethereum people are going to adopt a narrative of, hey, look, Bitcoin is digital gold, but we are the next step in financial technology, right? In digital finance. And technology often has, outperformed something like gold. And so something to think about moving into the future. It could be that these seasonality shifts are a sign of Bitcoin's maturity and that it goes sideways for the next X amount of time, right? And completely breaks all the ideas about 4-year cyclical models because people see it as a store of value in a digital sense. So it's going to get interesting.
All right. Great points. I would say this, the .com bubble was innovation that brought us into a web, we'll say 2.0, 1.0, but then it really catapulted us into 2.0 is what that was. So that was basically companies now having this opportunity to be more profitable, to reach a larger audiences, to capitalize and change the landscape of marketing. Now you're seeing with crypto, it's basically, it's the first time you're seeing a true push for technology to fix the financial industry because it's so jacked up and so centralized and manipulated. Yes, I'm looking at you, BIS. That's what I'm just trying to say. This is what you're seeing. You're having technology now meet the road that's saying enough's enough, and this is going to be a huge disruptor. But just like all other industries, when they see a threat, they don't try to fight. Well, first they'll fight it. I get it. And we know that whole thing. You fight it. You laugh at it first and you fight it, then it wins type scenario. But the major players in financial institutions were trying to learn this and figure this out much sooner before it got too big. And I think once again, I'll go back, put my sinister hat on. They stymied the adoption across as an investment because they needed to learn more about how this thing was going to work to understand how they could leverage this threat in their favor. Now that they've got that in place, now you're seeing legislation paving the path for it all. I'll put my other sinister hat on. This is another reason why I still think, and this is what I've been thinking for years now, I still am holding true. They're going to suck in as many people as they can into the crypto wave and get them invested. Keep in mind, there's only 1%, 2-3% of the world owns crypto. It's such a small percentage. They don't want to stymie this yet. They got to pump this thing up and make it even look more attractive than ever. And maybe it truly is going to be the underlying fundamentals of disrupting with tokenization and smart contracts and these types of various technologies. But the more people you suck into this, the more people that you can then basically, I don't hate to use the word rug, but essentially rug them. And then people are going to be up in arms and upset about, screaming that this is not right. How can an asset be this volatile? We need more regulation. And then those people will cheer on regulation. And then, of course, the governments will come in and like, you're absolutely right. We need to come in and have more regulation in place. And they'll be more than happy to do that. And I feel like that's exactly what you do. You create a crisis to be the savior, to get people to adopt to it. And I think that is far the way that this thing plays out. And I still think true to this day, that's what's going to happen. And I think it's going to happen. You're seeing this administration, and it doesn't matter. You can wear which hat you want on. This administration is very pro crypto, go. Who's to say the next administration uses all the things that were put into place and then flip the script to be more sinister? I mean, we never know. That's the thing. We don't know.
Totally. To extend your analogy, right? Yeah. I would make the argument that Web3, crypto is just barely Web3. I'm sorry, Bitcoin. Web3 is Ethereum. Web3 is smart contracts. Correct. Web3 is interaction between stuff greater than just sending and receiving. What else can you do with Bitcoin? You could play poker on it. That's pretty cool, but that's about it. And so, yeah, I have pretty high conviction that, and look, if you are a more conservative investor, as many people out there are, right? If you don't want to try to get on the cutting edge of the new wave thing, but you also don't want to, put your money somewhere it's not going to perform. I'm not saying Bitcoin's a bad investment by any stretch of the imagination, but I do think that this seasonality and this information is really enlightening, right? And it I think it's not trivial, and I think I'm excited to see what it means for the next step, or whatever the next label of the next season will be very interesting.
I think you're going to see a digestion period, right? You're going through a digestion period right now where people thinking that this is the end. The cycle is the cycle. But the thing that I just can't understand, I mean, Zenith, you just pointed it out. This isn't the normal cycle like the other ones we've seen. So if there was a time it was going to break the trend or change, now is absolutely the time it's going to happen. And I don't see how you can't stay bullish with riskier assets, crypto being that, when you're about to go into an environment, if it's even remotely close to what people are thinking, it's going to be a risk on environment. And I know that people are like, well, it's going to be a sell the news the event, right? I don't think so. Not if you're going to get 2, 3, who knows how many more cuts that might have to come, that they might throw things at it. I think this administration has been wanting these cuts aggressively, and they're going to get them one way or another. Now, either Jerome Powell makes those cuts, or come May when he's out, they're going to put somebody in place that absolutely is going to be aggressively cutting to get with what. Now, whether you agree with that or not, it's irrelevant. You got to trade the market you're going to be given. And I feel like it's building up more and more of a thesis for risk on. So would I be dumping crypto going into a risk on asset environment season? Like, to me, that's more what I'm looking at, risk on, risk off. And to me, it tells me, based on the seasonality chart, I would be thinking we're more entering into fall, or reliving summer, wherever you want to do it. I don't think we're going into the winter just yet. Now, I think once that physical policy and they get that thing under control and they print, I think, you're going to have there's going to be some hangover. Absolutely. But I just don't think it's going to happen just yet. And I think, and that's the other thing that Tom Lee was talking about in that really important video that he was talking about. And a lot of the guys are seeing that everybody hates this bull market. Everybody hates this bear market more than most bull markets, I should say, which is crazy. That means you have a lot of money on the sidelines that just hate it because they're like, this should not be going up. Why is this going up in this environment? Well, it's going up because it wants to go up. I mean, there's underlying fundamentals that are forming that you think that shouldn't be happening. Like it's one of the longest bull runs. Well, people were saying that in the 80s as well. And in the 90s, they didn't understand how this thing kept running, but it kept running. If you have a combination of an aggressive policy rate cuts and and pro assets and pro trading and trying to make an environment that's going to be as best as possible, they're going to pay and do whatever they can to make this happen. So Jerome Powell is important, but come May, I think it's May, right? He's no longer important. And I guarantee they're going to get somebody who's going to be drunk on wanting to cut whatever they want to do.
Sure. No, I hear you, man. I hear you. And I agree with a whole lot of what you're saying. I think my mind goes back to something that I look at and post about all the time in our groups, which is the business cycle, the ISM charts. It says the same thing. You know, I think let's go back to a point we made earlier about the post 2008, right? And how strong the S&P 500 has done and the people at the top. So even disconnecting from some of the smaller cap stocks out there. I think if they're going to regulate the money supply in the manner in which they have since 2008, which is something that I pay close attention to and sort of I log that date on my charts for lots of reasons. And even watching how they handled the biggest influx of fiat in human history around the 2020 era. I think as of right now, since 2020, 70% of all of the US dollars that have ever existed have been printed since 2020, which is staggering to think about. And so put all those pieces together along with, so S&P 500 gone, it just goes up anyway, right? They're going to, it's their dual mandate to preserve stable, price stability.
Stable prices and full employment.
That's right. That's right. And so by that logic, when we look at the business cycle chart, and we've been in the longest slump under 50 and since either 1980 or 1950, those, we're talking multiple decades long slumps. Like Tracker has said, it's hard to bet bearish right now. It would have to be a pretty cataclysmic situation, to go down from here, just because we've been down so long on the micro cap stuff, because of the monetary policy dynamics, basically fiscal policy dynamics, I should say.
True.
I still go back to that. I think it's bubbling because the silver market might be telling us something, that the demand might be starting to speak up.
That's true. I know we were talking about the old precious metals at the beginning of the show, but one of the interesting differentiations between gold and silver was that gold has continued to make new all-time highs pretty much this entire time. Silver reached its all-time high back in 2021, and since then, it hasn't even gotten back to all-time highs for silver prices, which indicates that there's different behaviors there with going on with it, and it is a good indication of the overall market in general. I think gold definitely is your analogy for trying to fight inflation and just long-term storage, because it's the oldest, it's the best, it's the number one. Meanwhile, silver, the number two, that one has a bit of a different story there. But they both do reflect the overall market to a certain degree when you combine them all together. All right, gentlemen, I'll tell you what.
That's an important point, man. I like that look at the market. It's a good way to maintain a zoomed out perspective. It's very wise.
All right, gentlemen, we have one final kind of season to talk about here, and it's a lot of crypto degen's favorite season, if you will. That's right, it's altcoin season. So this article coming to us from Tangent does a good history of the altcoin season, which is why I brought it up. But let's get into what they're talking about. Altcoin season refers to a short time frame when capital shifts from Bitcoin to altcoins or alts, leading to a notable and rapid rise in the price of most cryptocurrencies. Altcoin season, commonly known as alt season, is characterized by massive gains and high volatility. It's essentially a great time for non-Bitcoin maxis. During a relatively brief period, typically weeks or months, the values of altcoins soar as investors move their funds from Bitcoin to other coins. As prices begin to climb and the altcoin season index trends upward, FOMO, or the fear of missing out, investments come into play. This creates a cascading effect that further drives altcoin prices to extraordinary levels for a limited time. So, one of you guys said the magic words earlier. Well, when does altcoin season start in September? Macro conditions are just as important. If the Federal Reserve cuts interest rates or loosens up on liquidity, investors are more likely to take risks. And altcoins love a risk-on environment. Pair that with strong trading volume and retail enthusiasm, and you've got the momentum needed to fuel rally. Finally, regulation might play the role of a spark. Institutional investors will likely jump in with more confidence if we see progress on crypto clarity in the US or approval for ETFs such as Solana, Say, or other big players. Well, right there, that's pretty much everything we've been talking about. This stuff is exactly what gives people confidence in a more risk-on environment. This is going to be things that when it comes to the Fed loosening rates, what that does is it means the cost of borrowing money or the price of taking loans out for investments, if you're on that level, that's not the retail investor level, by the way, it's easier to do so. So you could say the cost of borrowing money goes down. Additionally, you need that spark, something that really also gives an increase in confidence in the environment. And that's what we're looking at when it comes to the ETFs. We saw that back in 2024 when the Bitcoin ETF got opened up. There were Bitcoin and crypto ETFs previously. Granted, they were futures trading, but it was the first spot ETF. That was the spark that really kicked it off in that time. And with other stuff coming down the pike, namely interest rates, that could be one of the things that could be the spark this time around. So with that being said, let's take a look at a very important chart. So coming to us from our other favorite site, CoinGlass, we have the altcoin season index. This is an index number of 0 to 100 that tells you which season you're in. If it's anything below 25, you're in Bitcoin season. If you're anything above 75, you're in altcoin season. Currently, I have the chart going back to about December of 2020. If you remember, that is a bit of a critical time because that's before the previous all-time high. That's going to be about right here. So just to do a quick analysis, we had this altcoin season right here. This is about late March to mid-June. So if we go back to hold on. Here you go. Altcoin season lasted from late March to mid-June. Back to our other chart. So let's go find it. Late March. That's going to be the all-time high for Bitcoin to mid-June. And that's going to be when we actually get that step down. So exactly what this article is talking about is one of the opportunities is that it's that idea that people are rotating. When you get the rotation, that's when you get the altcoin season really going up. Because what this is it's the idea that this is gains. This is not new capital. This is casino money. This is the extra $20 that you won at the blackjack table that you feel extra loose with because it's free money to you effectively. That's where we see that. So combining two things here, we see that the Bitcoin starts to actually show signs of a top. I believe at this time, the Pi cycle indicator for Bitcoin actually hit. So that was one of the indicators that Bitcoin was topping. Granted, we did have our double top here later on, but that's a bit of a different story. But this time right here, that's critical because that's where it tells people to rotate into alts. Additionally, we have another bit of a curious case. So next one is going to be a shorter time. So this one, March to June, that's about 3 months, a little shorter. This one right here was pretty much 1 month. This is going to be beginning of August to the beginning of September. But it's in 2022. If you go off your numbers, 2021 was the top, meaning 2022 was technically in the bear market. And that right here is this little area right here. What happened was we had a bit of a local bottom. We thought we might have actually seen the bottom of the bear market and people were starting to get into it. At this time, we had Bitcoin go all the way down to 17,000, start creeping up to about 25,000. And during that time, the index shot all the way back up to exactly where it was at the top of the market. Again, it's an indicator that people are trying to get in on the lows, and as Bitcoin starts making moves, the other coins make a little more proportional moves higher. Outside of that, and the next real time that we have is January of 2024. Not as heavily, but we do see it go pretty high here. This is one of the ones where you have to understand, you take a step back and you ask what's going on with the actual index. What are the indicators it takes in? Well, what it takes in is price appreciation of Bitcoin and price appreciation of other assets. So this time, right about here, we have a very steep climb in Bitcoin. If we flip over to another chart here, Ethereum per se, another very steep climb in Ethereum at the same time, but they're more proportional as opposed to altcoins outpacing. So that's why you didn't see it go into a full altcoin season. Because remember, altcoin seasons is when altcoins are outperforming Bitcoin. One of the famous sayings here is that if you're not in the best performing asset class, why are you in that asset class? That's kind of the idea when it comes to altcoin seasons, that you're trying to find the most optimal vehicle for growth. Bitcoin definitely has times where it is the most optimal vehicle for growth. In fact, the majority of this cycle, Bitcoin has been the most optimal vehicle for growth, except for very few times. Namely, in this time, there's actually another token that did really well, and that's going to be Solana. Solana, even if you take it a little further back in September, when we start to get the indicator that Bitcoin is starting to get bought up pretty heavily on our RSI here, Solana from that time pretty much went on like a run of from $20 all the way to 200. That's a 10x. Bitcoin only did a 3x. So at that time, something like Solana as an altcoin is going to be your most optimal vehicle. And that's the kind of stuff that we, oh gosh, I didn't even show any of that, did I? Sorry. So Bitcoin here, RSI goes into that overbought territory, showing that it's getting some momentum. The volume's starting to pick up a little bit. That's what pushes us up in there. Price continues to rise. But then if we flip over to the old Solana chart, yeah, that's where we see it go from $20 to 200. That's the 10x. That's the kind of stuff we're looking for altcoins. It's trying to maximize gains by finding the most efficient vehicle you possibly can. Gentlemen, any thoughts? Anything I'm missing on the altcoin season explainer?
Man, no, I think we nailed it. I think this is a great show. I really enjoyed it a lot.
Yeah. I think that was exactly it. It's the rotation, kind of full circle. We were talking about holding gold, and then gold people sell gold to buy into your laggers, higher riskier assets. Same thing with Bitcoin. Yeah, the rotation into alt season, that kicks off. Of course, the only thing is we had that head fake in March or Q1 of 2024, I believe, when we thought alt season was going to start, and that was a complete fake out. So that didn't really happen. I still think, once again, TradFi is muddying the water. So it's really hard to time anything right now. And I don't know. It's tough to say because right now, very obviously,
until we get to the legislation, it's just rinse and liquidity. Yeah. Where can they get the most short-term money until they can legally start to offer hybridized products, right? Hybridized digital banking products. And then it's a whole new ballgame. So till then, just keep an eye on the liquidity heat maps.
Yep. Yeah, that's pretty much what it is. It's a waiting game right now, just kind of lulling this thing, rocking everything asleep. So it's gonna be interesting because everybody's die hard. I'm selling the 4-year cycle. I'm gonna dump everything. But then again, if you get risk on, so that's what creates markets. I mean, this is what creates a market. If everybody was bullish, then you'd better get the hell out of the market. And vice versa. But we're kind of in the middle. So it's going to be interesting to see what transpires. But I think you did a great job of laying that out because that's exactly it. Fed rate cuts. People are looking they got all this reckless money now. They're playing with the house's money. Where can I put, double down and try to take some risky bets? That's exactly what it is.
I do have another indicator that I would like to propose. It's a bit more of a subjective one, but I think it's a good explanation when it comes to some other charts that we have not looked at yet. And those are going to be ratio charts. Ratio charts are how you can measure the performance of one to the other. We've actually looked at some of these tonight when we were looking at that real estate versus gold or the Bitcoin versus gold. Those are ratio charts. So if you want to find out when alt season is coming, you look at the difference between Bitcoin and some of your alt seasons. This is one that we have brought up, just a handful of times over the last few months, and that's the Bitcoin to Ethereum chart. What this one shows, and this is what I'm proposing, is that altcoin season you can get a good indication of altcoin season when the appetite shifts of investors. Up until this point, the appetite has largely been for Bitcoin through this entire cycle. We saw it through the Bitcoin ETF launching, and then we saw it confirmed when the Ethereum ETF launched, but by the numbers, the Bitcoin ETF was still the one being bought up. Traditional finance has been the name of the game this cycle, and they've largely exclusively been buying Bitcoin up to this point. And the only thing that they really have done with some of the other altcoins is actually short Ethereum. So that shows you that for the longest time there, the appetite was in Bitcoin. But now we're starting to see the winds change. We're starting to see people sing a different tune, which is where we get all the stuff that we've been covering with the Ethereum strategic reserves, whether it's Bitmine or Sharpleaf Gaming. Those people are actually starting to buy up Ethereum instead of Bitcoin. And that's where you start to see those ratios change, and you can see some of these things actually start to outperform Bitcoin. This is an indicator of what I would call an early altcoin season, or where we see the seasons change when it comes to Bitcoin season to layer ones and other high level projects. And then that's when we get to the real speculative stuff, is when we get into the full blown altcoin season, where you're actually going to see it show up on the altcoin index. So again, I'm saying this changing of the appetites, I think that's an early indicator of it. But at the same time, it also has to be followed up. And thankfully, we have seen people actually putting their money where their mouth is when it comes to Bitmine and Sharplink. And those guys are largely, in my opinion, some of the people that have really been pushing this other stuff. Now we're getting all the different headline stories about all the other ETFs that are being proposed and in the bundles and the SEI and the SUI and Doge and Solana. Now we're starting to see the appetite shift. So if those get released and they get bought up, I think that's going to be your early indicator that altcoin season is here. But again, if we go back to some of the principles we talked about and we actually look at the altcoin season indicator here, these things are very fleeting. The longest one that we had back here in 2021 was actually about a little less than 3 months, about 2.5 months. Again, in the bear market there, that was about 1 month. And then these very fleeting moments where you actually see things outperform. These are a matter of days, if not single days. So you got to stay on your toes. You got to be kind of paying attention to what's going on. There's definitely times in this market, in my opinion, where you can kind of just like relax, buy, hold off. That's going to be your winter season for the bear market, and it's going to be your spring season. Lock in those cycle lows, but then also understand that for a while there, Bitcoin's going to be the name of the game. Yes, you can definitely get some really, really, really good buy opportunities for your altcoins, but they're not going to perform, or they're not going to outperform Bitcoin until we start to see some of that rotation and that appetite change.
So Zenith, I'm buying everything you're selling right now.
Hit
Problem
me.
though is
What you got?
the short interest on Ethereum it just keeps going more and more and more. So that tells me there's going to be a lot of people caught with their pants down when that short squeeze really starts to catapult. Like, that's the thing I'm trying to understand. Why is there such a short interest in Ethereum right now? Knowing that, are they not paying attention to how they're going to try to move assets to be tokenized? You have Goldman and Sachs, and was it BY Mellon working together to tokenize? I know, Dave, you just posted just yesterday or today about Fidelity tokenizing stuff on the Ethereum network. So tokenization is a real thing. Why is there such a huge short interest in Ethereum?
Because they're accumulating spot. That's why.
They're accumulating the spot. Okay,
Yeah.
so walk us through this. So they're accumulating a spot, but they're going to have to. It's going to be a hell of a short.
While they hold the price down until the legalities change, and now they can use those spot bags they've acquired to then offer the products to us and then gain yield on it while it goes up. So they're holding it while it goes up, and it's not going to be like all the supply will be scooped up. If you go look at the centralized supply, Tom Lee cleaned out Wintermute completely. His buys last month, they had no more. I mean, he bought a record amount of Ethereum in terms of the velocity of the buys, and that's that same interview you were talking about earlier. And so,
great point.
No, I think that's what's going on for sure.
But I think this is why I think Ethereum is not absolutely a powdered keg right now, and I keep saying that because if the price starts to move so quickly, those the shorts have to cover. They have to keep covering. That causes the price to move even more exacerbated to the upside because they have to cover. Bulls are coming in and you're just getting their hands handed to them basically when that price is going up. And I just think that's crazy risky. Now, like you said, Chase, if they're doing that to try to make profit on it, to suppress the prices because they're selling it another way, I get it. That sounds like a traditional TradFi type product, how they're trying to manipulate it. But I just don't see that ending very well. I just think we've been talking about it. Eventually that short play is going to come home to roost and it's not going to work. And I just think that right there could push Ethereum a lot faster and quicker than most people are expecting, which goes back to a Zenith. I think also with this maturing market, that alt season is going to get smaller and smaller, of course. So I'm going to be shocked if alt season lasts, I don't know, 4 weeks, 5 weeks. I mean, it could be a violent move and it could be all over quickly because it's a more mature market.
I think you have a very good point with that, which is that the altcoin seasons could get a little more aggressive from that standpoint. I think that it kind of comes down to the math on it, which is how you want to do it. So as we looked at on the charts, sometimes those altcoin seasons look like a more of a flat top for Bitcoin versus when Bitcoin has a very aggressive top, the altcoin season are also sharper. So if you kind of have a longer time at that all-time high before it makes that dip down, then that could be a case where you actually get a bit of a decently long altcoin season. But if you do the math on it and you're just saying it's some price divided by another price, well, one of those prices is driving it. So if Bitcoin goes up and jumps down heavily, then that would indicate that people are taking profits aggressively instead of just kind of trying to see what's going on and then maybe start a slow rotation. And it could be a very quick, aggressive rotation. So as we move into the future, I do think that the Bitcoin price is not going to move as aggressively just due to the maturing market. What that would do, in my opinion, is it'll create lulls in the Bitcoin price. And then from the math standpoint of what is an altcoin season, it depends on how quick those altcoins move and how quickly people rotate out of the altcoins once they make profits in them. So I don't think it's guaranteed, but I think that your argument makes sense.
And to go back what you're saying, I think you'll see a rotation out of the alts right back into Bit. I think you can totally see that happening. So that's going to be curious because you could see it where people are just taking profits, rotating back into Bitcoin or rotating back into other large cap altcoins. And you could just see kind of money moving around chasing where the cheaper value is. You could see something like that starting to form, especially with ETFs coming to fruition. I don't know. It's going to be interesting to see. Another question that I think we need to start covering is, cool, if we think that the alt season's over, how would I short these? You know, so maybe we'll cover that with our members. Our members, we'll talk about that.
Well, here's your answer. You don't.
Well,
don't short the crypto markets. Dear God, leverage is bad. Shorting is leverage.
Everyone has their appetite. Look, H&J would have umbrage with your statements, my friend.
Look,
he would have a lot to say right now, and I love the guy, and he's got a point. You know, my man made me some money last month, and so I'm gonna stick up for him right now.
Yeah, times is short. I think when things get euphoric and people are popping champagne or getting really euphoric, and you see all your indicators are running hot, hey, I probably will be.
Well, and there's strategies, man. There's risk mitigation strategies to all of it, right? There's a lot to learn there, and come learn that with us at Walk the Block. If you check out the link, there you go. Zenith's already got it up there. Zenith, have at it. You do it better than I do, please.
There you go, folks. One of the things that we're talking about right here is that we have 3 people on the panel. We're coming up with 3 different answers, and that is largely due to we all have different risk appetites and different strategies that we're trying to build the market with. I hope that everyone out there builds your own strategy, and that's why we don't say that this is financial advice, because we're not telling you financial advice. We're trying to educate you so you can learn what is best for you. One of the ways that you can do that is you can hop into our private Telegram, where we have an excellent community of people, and we are also posting a ton of content over there, whether it's streams talking about technical analysis or cutting it up talking about the news and what's going on, and what is apparently our favorite topic, the old Federal Reserve, because, well, right now it's kind of a big topic in the entire market overall. But outside of that, folks, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. Because when we all work together, we can all win together. If you want to get in, head over to the website, walktheblockndf.com, and that's where you can find it. All right, before we get out of here, I do have one final question from a very excellent member of our chat. Moonpilled Rational Optics is asking, do we have any new or changed thoughts on Pulse Chain?
Me personally, my 2 cents is I'm holding all positions. I own Hex, I own Hedron, Semicosa, PulseX, Pulse. It's to me, it's quite simple. Would I want to sell now and go chase something else? No, I'm already chasing other things. I'm putting that money where it is. I'm not looking to do anything until we actually get some type of movement in it. Me personally, I'm in the narrative that I feel like since the OA is sitting on a absolute pile of Ethereum, that you will eventually start to see some rotation from that, potentially moving into the Pulse chain, pulling in more liquidity from the Ethereum side into Pulse chain. That's my 2 cents. Could I be wrong? 100% could be wrong, but that's the game that I'm playing. And unless I see some really big moves, I'm just sitting tight. That's my 2 cents. Now, the smart move has been when you get these massive spikes, sell some, get some dry powder. When it pulls back down to those support levels, put it back on. There's nothing wrong with that, but ultimately I'm holding most of my positions. I don't really try to get too cute with it outside of maybe some ratio trading here and there. But outside of that, I'm holding it. I like how everyone's very bearish against everything and everything's been beat down. And I think you've rinsed out a lot of people. Typically when people feel exhausted and they're just absolutely 100% defeated and they just can't give anymore, that typically is when you start to get closer to more of a bottom to when you might get some movements. I'd love to see RH come back and start doing some streaming. I think that would be fantastic to see. I don't know if that'll happen or not. I know
Funny you mentioned that, Tracker.
What's
It's
that?
funny you mentioned that. Did you see his tweet today?
I did not see his tweet today.
Well, that's a shame. If you go look at the price chart, it reflects what he said. Zenith, you want to read it? You want to do this to the honors?
Yes, sir. From the Richard Hart or Richard Hart Win over on Twitter. They yelled scam at Hex to 10,000X. I wonder if they'll do it again. Well, I'll be honest. I think that a lot of the messaging I've seen lately is there's been a handful of people that are trying to dunk on all the people holding Hex. But at the same time, I think the community is more energized than it has been over the last 2 years, pretty much.
Another
a lot of good products.
Something else big that happened on Twitter today was we had someone post their receipt of a Pulse Chain Marketing writable digital tablet in the mail. And they sort of flamed it. This person, I think, is affiliated with finance in some regard. I can't remember her name. I'll have to pull the tweet up. Come to Walk the Block for the tweet when I can go find it. But basically saying, this is a scam. And the response from our community has all just jumped on saying it's not a scam. Come look into it, blah, 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 blah. Let me come see if I can find it. I know our Apex Hex, our good friend, posted on it. That's how I'm trying to find it.
Here's what I'll say. Love Richard or hate him.
That's exactly it.
Everything that's been said that would be done has been done. Like what has the OA has done, stay true to what it's done. As there's been a few things here and there. I mean, there's some things if you want to nitpick, but all in all, I mean, you're trying to build something. The thing that blows me away is out of all the garbage that's in crypto that shows up on all these central exchanges, why is it being so gatekept on all the central exchanges for all this time? That I've always have found to be very peculiar because there's nothing but scams all over the place, all over central exchanges and garbage all over the time. Yet, no, Hex,
correct.
Posted.
Yeah,
I mean, you have a huge community. You've got products being built. Yeah, actually onboarding stuff that always seems to be working. There's good products being built by others. With the I'm just throwing off the top of my head the Hedron and Icosa product I thought was good. It brought some utility and functionality to the whole Hex staking, which is some people who aren't familiar. It's like a CED. You lock it up for a short period of time. And you have certain rates based on how long you lock it. But I think right now, if you've held this whole time, what is another 5 months, 6 months of holding it just to see what happens? That's my 2 cents. Like if something happens and you dump it, you're never going to forgive yourself. If it just lulls like it is now, or if it lulls like it does now, or even goes down more, then okay, nothing really transpired. But
we know that it's done it before. That's the significant point here. That's the point, is that he has done it before. He's made some pretty extreme calls about the Bitcoin top and been correct. He made a call about the Ethereum top. Most people speculate that he created the Ethereum top because he held so much and dumped so much. I am not interested in underestimating the guy.
And the OA is sitting on, what is it, top 5 holder of Ethereum? It is in the top 5?
Correct.
People need to wrap their head around that. We're talking about MicroStrategy. We're talking about all these other companies trying to chase MicroStrategy with these new treasury holdings and whatnot that are out there with like that. You got the Pulse Chain Sacrifice sitting there at number 5.
And that's not Richard personally either. That's not Richard. These are lists of companies, not of persons, right?
Yes. Yeah, exactly. I mean, closest one would be maybe Ethereum Foundation, but no, that's a community still. It's not one OA, one address holding all that. But
and Richard's not going to have one address either, right? I mean, so yeah, you get the point.
Yeah, you get what I'm saying. It's one entity sitting on this. And what kills me is, so everybody, it's a scam. Is it really a scam? I mean, he could have pulled so many times out this point and had just ridiculous amounts of money. Yet hasn't. And I'll still go back to what I'll say about RH, and it still holds true. Go back and look at the video when he was online and he was involved in the getting rugged on Mount Gox, where he was pretty much in tears. And I'm telling you right then and there, that's when he got pissed off at the community, because he got kicked so hard, so down, and was so disgusted by how bad the crypto industry is, that's what he's trying to turn around. Love the guy, hate the guy, irrelevant in the sense that he's obviously smart and he's been staying true. Now, if not, he's going to go down as probably the greatest scammer in the history of scammers if this ends up being one big scam, because this is one long, very long scam. And I just don't think that that's the case. I just don't, and I'm sorry. And for all the reasons that I've just laid out. So I don't know. That's my 2 cents. I know it's kind of long-winded, but that's my 2 cents.
All good. Dace brought up a very good point here. This is the tweet in question from our good buddy Apex Hex, part of the DGen Roundtable, by the way. We have a post from Kimberly Mitnick. Scams are forever. This is a mass mail crypto shill scam using dollar store gadget to trick people into buying Hex and Pulse Chain. What you see here is this is kind of, I think a popular product is called a boogie board. It's pretty much an erasable or electronic dry erase board. So fun, convenient. I've used one for years, even before this stuff. So they're useful. But Kimberly here, Grace Alexandra, Kimberly's post has generated almost 260,000 views. That's a lot, right? It's almost like this is the point of the marketing, which is that it's getting views and it's using limited funds to get a multiplicative effect to get more views. So yeah, look, the marketing campaign is in full swing at this point, and it's only going to ramp up from here. So as far as, do I have any new thoughts on Pulse Chain? Not really. I mean, it's pretty much exactly what we've talked about, which is that did a 10,000x before. It's a guy who's been in the crypto industry for a long time, appears to have a very good grasp on all the fundamentals of it. The products have not changed at all. The only thing that's changed are the people that are holding it. We've seen pumps, we've seen dumps, we've seen good times, we've seen bad times. All that stuff indicates to me that Pulse Chain is very capable of making big runs. And if we reference back to the chart, it's not time to run just yet. We're getting close, but at the same time, it's not time yet. We're getting close to when it should be. But then again, I'm using the very dangerous should word. And the only thing that's going to determine whether it does well or not is at the end of the day, if it actually goes up. So based on everything going on here, no, I don't think my thoughts have changed very much. I think that, has it been rough? Yeah, absolutely. Have there been times where we probably should have taken a little bit of profit? Yeah, probably. Did I personally? No, not really. That's more of, I was just trying to buy up generational opportunities to really try to make sure I can capture the top when it comes. But that's a personal thing. That's not for everybody out there. What's going on, though, is that I think we're getting into the point where we can actually start to see some moves. If we want to go over to every Hexican's favorite website, gopulse.com, well, it's performing decently well. Granted, it is a bit on a bit of a decline since the last month, pretty much, where we had a nice little top there, bit of a recovery. But if you want to get technical with it, could look like a wave 1 of sorts, getting ready to go into a wave 3. And if that's the case, then that could be a very, very good time, because those wave 3s, when it comes to Elliott wave theory, run hard and long and are some of the most growth building opportunities out there. Again, nothing's financial advice here, so I can't tell you to go buy more or whatever. But if you ask yourself, how does this price look in comparison to the price history? Where do you think it could go from here? Is this the kind of asset that you want to invest in? And do you think it's going to be one of the most optimal assets for you? And then additionally, getting back to strategy, which you got to build for yourself, how much your allocation are you putting into it? I can tell you personally, this is definitely an altcoin for me. So I don't think I have more than 25% of my portfolio inside of the entire Richard Hart ecosystem. But at the same time, though, we've seen that these kind of tokens can have outsized gains, and it's done it before. Therefore, if there's anyone that can probably do it again, yeah, I'm going to bet on Richard Hart on this one. So yeah, no new thoughts, still holding in there, still holding the faith, and still have high hopes for it. Alrighty, gentlemen. Well, apologies, a bit of a long show, but wanted to get that question out there from Moonpill Rational Optics, because he's an excellent supporter of us. We appreciate you a lot, my man. Hope you and the wife are doing well. All right, gentlemen, outside of that, where can the folks find you and what do you got going on? Mr. Dace Northall, how about you?
Well, you can find me in the Telegram groups, right? Walk the Block. Here, you had the site pulled up earlier. I believe there's a link somewhere around here. We got to get a QR code on this thing, man. I'll help you out with that this week. We'll get one up there. But yeah, also find us at Walk the Block NDF on X. You can probably find a link there as well. To our Telegram, you can find me in there. And yeah, on X and Instagram at Dace Northall.
Love it. Tracker, how about you, sir?
Well, normally you can find me here every Monday, except last week, but every Monday you'll find me here with Zenith and Dace. We're always doing it. And then, of course, in the Telegrams, we're always jumping in there doing daily streams that get recorded every day, including a PDF file that kind of summarizes the video if you don't have time to watch it with Jay. He does a lot of TA. We dive into a lot of stuff, much more lower level detailed on the TA side of the house, and also going over macro events and news like we do here. But definitely much more like ear to the ground type stuff there. Trying to help and assist everybody there in the telegrams as much as possible. Obviously in the DGN roundtable with all of our friends and partners over there in that community, that's grown up to I think we have pushing 440 members over there that are in that free telegram, which is great. So if you guys don't want to jump in right away, you guys can certainly go into that telegram and check out some of the discussions. But like we do get into much more detail and walk the block communications and timing. We do a lot of emergency streams over there too, and people are panicking when things are starting to move quickly, or maybe that it's an opportunity to kind of pull everybody together, take a deep breath. Okay, let's walk through this so people don't make any rational or incorrect emotional decisions. So we're over there doing all that. And we had created a bunch of one-on-one information courses that are free out there on our YouTube channel. So you guys can find that here. Please look those up because that's some really good information. If you're not familiar with crypto, we recommend you probably checking some of that stuff out. It'll get you kind of going and get you started if you're new to the game, and you can at least kind of see what we're already able to produce. So outside of that, just trying to stay the ears on the ground, waiting for the Fed meeting next week to see what's going on like everybody else.
That's right. It's almost 2 more weeks, but it's a little bit less than that. But yes, that is the big event that we got coming up. Outside of that, we're going to be keeping on top of everything else going on here, trying to keep putting out good content and doing some fun stuff like the show today. We're actually break down more of a topic than the news stories because, well, yeah, we're in that waiting period right now. But I do believe big things are coming around the corner. Outside of that, folks, you can find me on Instagram and X at ZenithDI. And then other than that, yes, I know we said it a million times, but we'll say it again. Join the Telegram. That is where you can find the best access to all of us there. We try to put out the best information, best content, and try to help build the best community over there. Outside of that, though, folks, thank you so much for joining us. I know that the markets are eerily calm right now. I'll say that much. But either way, keep a weather eye on the horizon because anything can happen. These are the crypto markets. Outside of that, folks, thank you so much for joining us tonight. We love hanging out and talking with all you. And until we catch you guys next time, hope you all have an excellent evening. Good night, everybody.